What's going on, Facebook family? This is Travis Witherspoon from Carter Cow Capital, helping you fight for your financial freedom throughout the Forex market. I'm going to quickly show my face and pop back out. I'm having a bad hair day as we go through it, but this is the setup. Even though we're somewhat late, I do apologize about that. I end up having a run over with one of my clients with the Fibonacci fundamentals. I wanted to make sure that I end up being able to speak to everybody and go through part 4 today and be able to get everything done. Without that being with that being said, let's go ahead and jump into the disclaimer and get everything else started with that. So disclaimer is here while other people are basically signing on or being able to log in. I'm just going to go ahead and get through the disclaimer. Remember, I am not a CPA, so I'm not going to tell you whether to buy or sell. What I'm going to end up telling you or to do is basically just learn from an educational standpoint. Now, you can be able to make your own decision based off of what we end up talking based off of that. Now, understand Forex involves risk, which means that you have a chance of being able to win money and you have a chance to be able to lose money. Understand that a lot of sometimes that just happens. It is what it is on that. The times when you end up doing very well, you end up making a lot of money. The times that you end up doing very poorly, hopefully you can be able to minimize your overall losses with everything that ends up going on. Past performance is not indicative of future results, so just keep that in mind while we're actually going through this. So I'm actually going to stay off the screen on this one because most of the stuff that we're going to end up talking about is really going to be set up more for being able to understand charting and the things that actually go along with it. Now, I'm going to end up talking about more from a trading view and from a smart trader perspective. This one is going to end up being somewhat short. If you're interested in being able to get either one of these, all you have to do is basically just go to Trading View or go to Smart Trader to be able to go from there. Now, if you're not familiar with that, in my previous video that I end up posting up, if you take a look at that, you can be able to go on and be able to look from there. Everyone that basically just hopped in, please make sure that you end up typing in your name. Say hey. If you have any questions while we're going through this, remember this is an interactive session to be able to ask questions and be able to go from there. You can be able to ask those questions and be able to go from there. But without any further ado, I want to talk about something that I ended up posting up a little bit earlier today on the economic calendar before we end up moving on. Remember, I ended up saying personally that I thought that the dollar was going to end up crashing today or crashing yesterday because of the economic news and everything else that was going on. Now, in our setup videos, we didn't necessarily talk about economic research and everything else like that. We will talk about that a little bit later on in part 5, but I want to go ahead and go through this just because it's somewhat of a pressing deal based off of being able to look at this. If you look at initial jobless claims, what ended up happening last month was the market ended up being 282,000 jobs of people not having a actual position, right? People end up losing jobs from that position. Based off of that, it was expected for about 1 million people to be able to be in a position of where they were looking for jobs and where they was trying to go into unemployment. Well, what ended up happening was that news and everything else actually ended up being even worse than expected. It ended up being almost 3.2 million people that are basically affected by the coronavirus and not working at this particular time. Whenever you end up seeing high impact news and the market end up going down, or the market end up being negative on that, then you should see a negative reaction to that currency pair. In this case, it is the dollar. So when we end up looking at how the market ended up moving from there, it was expected that the US dollar index was going to end up being negative. And I said that one of the pairs that will probably end up having the greatest effect of how the market was going to end up moving from that actual pair and moving down was going to end up being the Japanese yen. The reason why I said the Japanese yen was because it was the only pair that did not break the overall sequence of that move. And what I mean by sequence, it meant that it did not go past the A of that overall move of the ABCD sequence. If you're interested in being able to learn a little bit more about how we end up trading this, I'm getting ready to put down my website so you can be able to take a look at that. Hop inside of one of our free webinars about that. That is our Fibonacci Fundamentals course right there. Over the course of the last 2 days since we've been in, we're up 651 Oh no, okay, I don't want to cancel that. I need to hit enter, not exit. Let's see. Bam, there we go. Make sure I spelled everything right. Yes. So if you're interested in being able to learn anything more about that, currently, like I said, right now we're up 641 pips, and that's in 2 days of overall movement for the market being able to move from there. We end up doing that on a half of a mini lot, and basically end up getting into 2 positions. For some people, that end up being $640. For some people, that actually end up being almost $6,000. Right now, for me, that's almost $200 for the overall movement, and it's expected to go down at least 1,000 pips. Let's see. Okay, so we got reconnected. So I'm just going to open up one old chart that we ended up using before. And I'm just going to talk about some of the features that you can be able to use. Now, obviously, when we're talking about charting, you're going to end up looking at things called candlesticks. And some people don't necessarily look at candlesticks, or look at line charts, or look at other things like that. So if you're familiar with bar charts, you can be able to click on bar charts in the Smart Trader to be able to go from there. If you're familiar with line charts, then you can look at line charts to be able to understand what's going on. Now, the primary difference between all 3 of these, and then you have Rinkos, which are on TradingView.com, is that line charts does a very good job of being able to show you where support and resistance is. So if you're looking at this chart, we can be able to see that that is a pivot zone right there, because the market has basically hit that position multiple times while the market is actually going from there. We can see that that is a resistance point, right? We can look and see if we do that again, and now we can see that this right here, or somewhat close to that, will end up being somewhat of a resistance point. So we can kind of get an understanding about where the market is actually going between just being able to look at that from a line chart perspective, and kind of clear up the noise between all of the information that's basically being given. Now, that doesn't necessarily tell too much of a story. What candlesticks does is actually tell you a story about overall U-turns and reversals, because of the actual candlesticks that are actually being shown from there. And if you're interested in being able to get basically a cheat sheet of what candlesticks that you can be able to use and be able to capitalize off of, I actually have a cheat sheet that I can be able to send over to you. All you would need to do is go to cartercowcapital.com/start here and get set up in one of the actual free webinars, so you can be able to get that copy. Or just write your name to say me, and then after that, write in cartercowcapital.com/start here, so you can be able to get one of those cheat sheets for us being able to see that. Now, the next thing that you'll end up noticing about this for its overall movements, and the reason why this charting software works out very well, is that you can be able to use some other features along with it to kind of help you guide your way through. Now, this is a free version of Smart Trader. I have paid for it previously, so some of the functions that I have on there previously from when I was paying for it are still there. But essentially, let's show you what you're looking at. On this chart right now, we're looking at the Swiss franc versus the Japanese yen, and we're looking at it from a weekly time frame. From here, what we end up doing on this side, we have our bars, we have our candlesticks, and then after that, we have our lines. So whichever one that you feel comfortable with and being able to look at, that's the one that you'll be able to personally stick onto. Then after that, you have your compare or add symbol. Your compare or add symbol basically ends up comparing that with another currency pair that you can be able to work through. And then after that, you can be able to zoom in and zoom out on the page, or use different cursors to go along with that. Now, one other thing that kind of matches up with it and kind of makes it a little bit easier, especially when you're trying to figure out how many pips you're actually going for and how many pips you're actually risking, is that you can use the measurement tool, which is right here, which allows you to be able to scroll down and be able to get an idea about what's going on accurately within that one. So from the head of this point all the way to the end, that was basically almost 1,600 pips of overall movement from that overall spot. Now, one of the things that they end up doing very well on this one is that it has smart support, which means that based off of your position right there, it will tell you exactly what a support is in that actual point that you can be able to place in without you having to do anything. It has smart resistance, and it looks at the new resistance that ends up happening within that actual chart. So from a weekly perspective, we know that the resistance is at 114 and our support is at 110.89 from just being able to place that in. One other thing that you can be able to use is something called the smart fib function. And the smart fib function is my favorite function on this overall program. Reason being is because it saves you a lot of time on being able to figure out what's going on with different sequences. And let me give you an example of what I mean by that. So I click right here, click on smart fib. I go to, let's go to this high point right here. If I click onto it, it will show you the ABCD sequence between both moves. And then after that, you can be able to see exactly where you're at on the chart and be able to make an accurate decision about what you need to do from that standpoint. Now, currently on TradingView, they don't have that. So you will literally have to go from A to B on that point and have to be able to do it yourself for the overall market. So it's a benefit of being able to have a smart trader account. That's one of the benefits to being able to do it. Other than that, one other thing that I truly like about this one is that it has your harmonics that you can be able to go through for X, A, B, C, Ds. If you're interested in being able to learn something like that, that's one thing that you can be able to do. Or you can just use the ABCD swing tool to be able to kind of get an idea about what's going on with that one. So you can go A to B to C and see what position that it is by looking at that percentage. Right here, the percentage is at 44% of the move, which means that it ended up going past 38% of that move, which means that from here, let's try it over again. Which means that from this position right there, the extension that goes along with that will end up being the golden ratio, which will end up being right around 161.8% of its move. So if I go straight down there, this one actually went 234, but the 16.8 was right around this area. So it basically ends up telling you where's your overall extension at and what percentage it actually goes with. Some people actually end up using that a lot. Me personally, that's not one of the things that I use it for. I actually use this to be able to kind of diagram about where my actual positions are on the chart and where they actually end up going. If you want to be able to take snapshots and be able to kind of figure out what to do with that, you can click right here on the save as image. You can use that to be able to save your chart and kind of get an idea about what you were looking at before, so you don't have to keep on scrolling into that. You can hide most of your information and be able to show it if you just want to clear off the screen. And if you want to pay a little bit of money, they have a smart script function that you can be able to use in the marketplace to be able to get more information about some of the things that you're looking at on the chart from there. Now, that is Smart Trader on TradingView. One of the things that I truly like about the charting on TradingView is that, let's go to Gold USD, because I was just looking at that earlier. And like I said, people that are watching, thank you for joining into the setup part 4. We're basically looking at charting software and the benefits of all of them and being able to do it. Now, one thing that I truly do like about TradingView is that for like $9 a month, you can be able to pay for and be able to get multiple charts all in one. So in this one, the way that I have it set up is that I got my monthly right here, I have my weekly right here, I have my daily right here, and I have my 2-hour. So some people, you're not going to get as detailed as I will be on this one, especially starting off if you don't have a trading strategy. But me, I really kind of look for alignments when I'm trading, and when everything's aligned based off of these 4 charts, it makes it easier to be able to say that I want to be able to trade that particular pair. Remember, we're looking at, you're talking about 7 major pairs, 28 pairs that you can be able to choose from. You have to be able to figure out which ones are going to end up being the best ones to be able to trade. With that being said, this is one of the ways that you can be able to go from there. Vicky, how you doing? I hope everything's going well with you. But overall, it has pretty much the same type of tools that you can be able to use. So like if we were to look at the monthly chart and we're just saying that, hey, this is the monthly chart right here and we want to use the compare function. Let's say typically gold does very well with the Japanese yen, or pairs very well with the Japanese yen. So we look at USJPY and we place all that information in for its Forex. What will happen is it will actually end up giving us another symbol and be able to see it from a line chart perspective on what it actually looks like. And what you'll end up noticing is that when the market ends up going down like this, the United States dollar basically ends up getting stronger. So basically you can see the crossover and see that both of these have a correlation between each other when the market is basically going down and going up. So hypothetically, when gold is going up, then that means that the Japanese yen is getting stronger. By being able to understand that information, you can be able to cut your charting time in half by being able to look at one chart and being able to identify that on how it basically compares to another chart. This was the exact reason why I ended up saying that the USJPY was going to end up being stronger over the course of the next week to possibly week and a half, just based off of being able to look at an overlay chart like this. So that's one of the things that you can actually be able to do from that function. One other thing that you can be able to do is kind of be able to calculate whatever your risk reward is. So let's say hypothetically, I'm going to zoom into a closer chart. So if we're looking at this from a daily perspective, right? And daily wise, we're basically saying that we want to be able to sell, hypothetically. If we want to be able to sell right here, and we know that our take profit is down here, we can use our measurement tool to be able to see how much it actually is from that perspective on just how much it is for the overall gain. Typically, they do that in points for its overall movement. Same thing up here for its overall points. But if you end up using your risk to reward model, you can click on that and you can say that your, okay, let me change that because I want to sell. You can go to the short function, click right here where the actual price is, set your target, set your stop, and it will tell you what your risk to reward is. Now, it's very important to be able to know what your risk to reward is on any type of trade. The reason why I say that is because that people lose more money on trades where they're trying to make the same amount that they're trying to lose. And I hope that makes sense, because if you're trading the same amount that you're trying to lose, then that means that you need to win 60% of your overall trades. Hey, how you doing, LaShawn? I hope everything's going well with you. You will literally have to win 60% of your trades that you have to be able to win. So if you end up finding trades that have risk reward values of 1 to 2 and 1 to 3, then that means that if you end up winning this trade, right, like on a 1 to 3 risk reward ratio, I can lose this 7 times and still be able to make money on this overall trade. Reason being is because we're risking so little to make so much, right? So if you find trades that give you that possibility of being able to get a good risk reward factor when it comes down to trading, I will always consider these trades first before looking at a trade that has a risk to reward of 1 to 1. Because think about this. Now, when we're trading this, I would have to win 50% of my trades to even be able to make money within that, and be able to go from there. LaShawn, is this your first time actually hopping into the setup, or is this your second time actually watching one of the videos? But yeah, I mean, it's one of them situations where anytime that you can be able to go to a risk to reward of 1 to 2 to 1 to 2.5, then you're giving yourself a better chance of being able to make more, be able to make more over time, compared to just not doing anything from that actual position and actually having to be more perfect than overall trading from there. The last function that I actually do like about both of these charting softwares is kind of two things. One, they have a templates function, or you can go to the indicators, and there's certain indicators that you can be able to go into, and they actually are somewhat set up from people actually creating them before. Great. It's your first time. Congratulations for hopping in. This is supposed to be an interactive session, so if you have any questions while I'm actually going through this, please don't hesitate to ask. Mr. Danka, I hope everything's going with you. Going well with you. Haven't seen you in a while. Um, but yeah, it's one of them things to where you can be able to you can actually go to the indicators. When you go to the indicators, they have built-in scripts that you can be able to use, and they have public library scripts that you can be able to use. So hypothetically, let's say if I wanted to look at a public library one and something is already created, let's say Fibonacci Bollinger Bands, and I'm interested in being able to use Fibonacci Bollinger Bands, and I can click on that. And okay, let's not use that one because that's not. Let's get a different one. Let's go super trend. So if you go to the super trend on this one, then you can see that it's already created and it already has the arrows and everything else like that. And if you're familiar with what super trend does, basically what it ends up telling you is it basically ends up giving you the overall sentiment of the market. So anytime that this actual line is above the actual candlesticks, and that means that the overall sentiment is bearish and you should be looking to sell. It actually ends up giving you an arrow of where to be able to sell from that position from when it ends up breaking. Or basically when it's green, then that means that you only should look to be buying at this particular point. So it gives you a chance to be able to get in and be able to buy. I actually ended up using super trends for one of my old EAs that I actually ended up creating, which was a True Trend. I actually have it as an automated system, and that's something that we're actually going to end up being rolling out actually in late November. That I'm very excited about. We're actually still doing forward testing on that. And it's really kind of based off of 3 super trends and being able to place you in the most optimal position to be able to sell and buy it. So that's one of the things to be able to look for. So even with that being said, like I said, you can click on indicators. From that indicators, they have a public library that you can be able to take a look at and figure out if you like that, if you like some of the things that they actually end up placing in. They have built-in ones that you can already be able to use based off of your overall trading style. Me personally, I don't like to have all of that stuff in my chart. I done figured out after a while that I only really truly use maybe 3 indicators. And the 3 indicators that I particularly use in this case is the average directional index, and I use that for momentum. I use the stochastic RSI to be able to figure out if it's in the buy zone or the sell zone or the no trade zone. So that basically gives me an indicator on what's going on with time and time decay. Now, what I mean by time and time decay, that means this, and it's very simple. So everybody pay attention to what I mean by this, and I'm going to quiz you real quick. So the market is basically set up from 0 to 100 on this overall spot, meaning that if it's 0, well, actually, if it's 10 or below based off of my setting, but typically it's 20 or below based off of that setting, then that means that the market is oversold. So if the market is oversold, then you should be looking to buy in that case. Or the market will end up going over 80 or above, or right above this red line. As soon as that passes that red line, then that means that it's overbought, and then you should be looking to sell. So by being able to understand that information and being able to wait until the market gives you an overbought or oversold position, then it allows you to be able to stay out of the market in the most volatile times. And you only want to be able to get into trades when it's only giving you a great strength or great weakness in a overall trade. So this extreme overbought or extreme oversold positions to be able to get in from that overall spot. First off, does that make sense? I want to make sure that for the people that are in, for the people that end up talking to me, does that make sense? So I'm gonna kind of rephrase it one more time. Anytime that this line is above the red line or goes above the red line, this is considered the sell zone, meaning that you should be looking to, that means that you should be looking to potentially sell in that position. I want to make sure everybody understands that. So potential sales are basically in any one of these positions. So you got that position right there. Let's see, Control C, Control V, 3, 4. So we got one right there, one sale right there. We have another sale that basically ended up saying that we should hit right there, and another sale that we should hit right there. Now, every time that you look at that, it's not a perfect situation, not the holy grail, but it's giving you a good identifier that you should be looking for sales. Now, consequently, anytime that you end up seeing it in the buy zone or basically down here by the green zone, then that means that you should be looking at potential buys, right? So if we go to this spot right here where the market basically ended up hitting inside of the buy zone and you had that crossover with green over red, now you should be looking for a buy, right? Right here. Let's see, move this one. Move this one. Okay, which one are you gonna let me use? Delete that one. Okay, so right there where it crossed over right there, you have a buy position to be able to get into. Right there, you have a buy position to be able to get into. And if you notice, all of them were basically at extreme lows for its overall position. So what ended up happening was as the market ended up going from the buy zone to the sell zone, we can see that the price slowly started rising and started giving you overall gains of actual movement. So let's say from here to here, just on that overall spot, it says 3669, but really that's 360 pips of overall movement. Now, if you're not familiar with pips, remember pips is the lowest increment of any currency. So we're talking about a dollar. The lowest increment of a dollar is a penny. There's 100 pennies in a dollar. So it moved up basically 300, or basically ended up moving $3 from that overall movement. And based off of how much you leverage, you can be able to make money based off of that position. If you're not familiar with that, please go back and take a look at some of my previous setup videos that we end up having all week. And be able to go from there. Now, quick question, and here's the quiz, or better yet, one other thing. When the market is in this gray zone, right? Anytime that it's in the gray zone, that is considered a no trade zone. And for anyone, that actually should be a hard line rule. Anytime that this arrow, all this line and everything else is in the gray zone, it should be a no trade zone. There's no ifs, no ands, no buts about that. Don't think about it. Don't look at being able to trade it. If you're trying to save money, you're trying to maximize your overall opportunities on being able to buy and sell in overall positions. You want to be able to get in extreme overbought or extreme oversold positions, so you can be able to maximize your chances and allow the market to be able to move to your position, so you can be able to make money from there. Hey, Mackenzie, I hope everything's going well with you. And to be able to get in. So here we go. Once again. Red line is oversold. Green line is overbought. So red line, you're looking to potentially sell. Red line, you're looking to potentially buy. Hey, Aaron, I hope everything's going well with you. So here we go. I'm going to place the arrows in. All I want y'all to do, for the people that are still here, tell me if you would buy, sell, or write no for no trade zone. All right. Buy, sell, or no for no trade zone. Let's be interactive here. Ready? Right there. Buy, sell, no trade. What would you do? If we're looking at that position, would you buy, sell, or no trade just based off of the stochastic? There's no wrong answer. Well, there is a wrong answer, but take a shot on that. Let's see what y'all think. For the people that are still here, people still watching. Okay, I'm going to answer that question. That would be a buy trade. That would be a potential buy trade that you could be able to take. All right, so I move this and let's go put it right there. All right, I move it from that area. I moved into a new I moved that arrow into a new position. What type of trade would that be? Willie, how you doing? I hope everything's going well. But if we're looking at that position right there, if it's in the gray area, if it's basically looking in that area, that will be considered a no trade zone, right? It'll be considered a position of where you wouldn't trade, right? Now, if the market is up here, right, it's in an extreme overbought area. From that extreme overbought area, we'll be looking for potential sales in that position. Now, with that being said, to be able to kind of close out on this one, all of this is kind of subjective based off of what your overall trading plan is, right? Because if we're looking at this from a long-term perspective, maybe you might be only looking for, even though it might be in the sell zone, maybe you might be only looking for buys, right? Because on the long-term movement, maybe the long-term movement is basically telling you that you should buy compared to actually selling. So if you look at that from the overall perspective of how it's being shown and what your overall trading plan is, trading plans is, if it's not in a position, of where you should be trading at, then some of these are false signals. To kind of give you an example, if we look at gold has been rising over the course of the last year or so, right? Just based off of the daily chart. So that means that if we know that it's in an uptrend, if we compress the chart and we can see that it's in an uptrend, let me see if I can. We're gonna clear the screen real quick. So if I look at it and I see that it's in an uptrend, right? And we know that the market is slowly making the higher highs and higher lows, then that means that I will not be looking to potentially sell. I will only look to potentially buy. If we know that we're going to only look to potentially buy, then every signal that's basically telling you to sell is not necessarily a signal saying, hey, we need to sell. It needs to be, hey, we should be looking to partially take profit, then be able to get back in at a lower price, right? Depending on where you end up getting in at, right? So that's another way to be able to look at it from an overall standpoint of, yes, we can see that we're in a buy zone, we can see that we're in a sell zone, or we can see that we're in a no trade zone. But if that doesn't align with the overall direction of what the market is actually doing, then you shouldn't take that trade, whether if it's buying or selling. I hope that makes sense. If you have any questions before we actually end up getting out of here, this would be a great time to be able to ask them. But while I'm doing that, while I'm getting everything set up, I am going to go ahead and place up my website one more time. If this is your first time showing up to the setup, this is a live interactive session where I'm actually really trying to help out people that are looking at starting the trade for the first time to be able to learn anything that learn everything that I wish I would have known over the course of the next 5 days. And tomorrow's the last day of that 5 days. So if you haven't seen the actual first one, second one, or the third one, you can actually go to my actual personal page or my business page, Carter Cow Capital, and be able to just watch that session from there. It's we are providing a lot of great value and a lot of good teaching from being able to do that. And quite frankly, we're doing this so you can be a confident trader. Also, to where you can be able to say, hey, this may be something that I may be interested in being able to pursue, or being able to bring in some more passive income, generational wealth, or just an extra $200 to $300 a day. Right? I mean, a day or a week or a month, depending on what your overall trading style is. Now, if you're interested in being able to learn what we actually do. If you go to this website, you can go place in your email address, first name, last name, phone number, and the system that we actually are pushing right now is our Fibonacci Fundamentals course. And you click on that. Once you click on subscribe, then it will actually end up sending you an email with all of the information that you will need to know. Now, if you go down to the bottom of it, it also has join the session. If you click on join the session, you will actually be taken into a live webinar from that actual point. Now, it's actually been pre-recorded, and it's talking about what we end up doing for is our overall trade rankings. And this video is really set up to where it shows you how we end up breaking down our overall trades in the actual positions that they're actually in. Based off of that, it allows you to be able to break down some of the trades that you can be able to get into and get out of, and kind of just say, if we're not in this position, then I don't want to trade that type of trade, which means that you're saving money by not trying to jump into any trade just because there may be an open opportunity. You're only trying to say that I want to get into the best trades to be able to take, and I forget all the rest when it comes down to that. What this does is it allows you to be able to cut down your overall trading day to 90 minutes or less each day, because now you're only focusing in on maybe 2 to 3 different pairs that are basically in the best positions to be able to trade. And it makes it very simple and repeatable, because by being able to trade that same trade every day, then that means that you should know what to be able to look for while the market is actually going through its overall swing. One last thing while we're actually on this, if you're interested in being able to get my book, Success in Forex, once you end up clicking on and join the session, if you scroll down and you click on the book, then you can be able to get the information from that book from there. Now, with that being said, I do appreciate each and everybody that ended up popping in on this when we actually ended up starting off a little bit late. I do apologize for that. I was actually with some of my clients for the Fibonacci Fundamentals Master course, and we was actually going through and finishing up on some of the things and wrapping up this week. And really almost wrapping up this month for us, everything that we've been talking about. But until then, plan your trade your plan. Everyone, y'all end up having a good one. I'll see y'all on Sunday. I see y'all on Friday, where we will go ahead and start taking a look at the market and showing you our overall trading strategy.